Okay, so let's go. So can you see the first slide? And what this really is we just want to emphasize this is not Bitcoin for banking. Blockchain is a distributed ledger technology, and like the internet protocol was decentralized communication, blockchain will be for decentralized transaction. So think of internet digital communication, blockchain digital transaction. So next slide. The potential here for blockchain is, and this was covered a bit by Scott Stornetto earlier, but security, quality, even though there are some vulnerabilities with cold functionality, performance should be there. People are wrestling with scale and capacity and latency. But the key thing is that it's accessible. Maybe apart from some Ethereum gas fees, affordable. And more importantly, it has a low cost of entrance. So this is going to allow competition. And this is why you see the innovation and the rapid development in the crypto, DeFi, and metaverse. Next slide. When we're looking at the current bank and capital markets, we have real-time trading. The illusion of sometimes real-time process. The cards get debited in real time. But when you look at all these markets, services, and products, they all have multi-day settlement. And each market has its own customized infrastructure. And the result is that all have different settlement infrastructures, and they're primarily driven by institutions transacting through a central clearinghouse or a central clearing party. And that's where this sort of inefficiency and inflexibility comes. So if we go to the next slide. You can see overall the current market is inefficient in this structure, and it's hard to change. It's reactive. There's a lot of retroactive reconciliation and exception processing. It's also risky. Within the US equities market, the brokers will post up to $8 billion a day to cover their settlement as collateral for their settlement risk. It's also old tech. A lot of these big banks and brokers are running on 1980s technology written in COBOL. It's also competitor prohibitive. It would be extremely expensive to create a new bank or broker from scratch, particularly of what they call a strategic financial institution. Those of $50 billion in assets or more would just require huge money to set up. And then they rely on monthly or quarterly reporting. So these are the sort of holistic challenges that advanced blockchains and distributed ledger technology are trying to address. And this is, again, not unique to the financial services. Next slide. So what you see here, and it's just a simple representation, it's different solutions in their own silos, clearing through central counterparties, requiring retroactive reconciliations and recovery. So if we go to the next slide, what blockchain starts to present is the idea of a network where there's party-to-party transactions without a central clearing authority. Now, as I said, there's still some challenges related to performance and functionality, but this is starting to open up the market to a different concept of transaction settlement. And this is where it gets very interesting for the capital markets and banking worlds. If we're looking at an advance and the solution I'm working on for next year, Tapestry X, we can go to the next slide. We're really talking about the full potential of getting to a network of networks with real-time settlement, which allows intraday financing, not just overnight financing, high-capacity, scalable, and having more of a universality to the protocols. So it can do configurable accounting and interoperate with the legacy infrastructure as well as other networks and other protocols. So this is the goal, to get into, rather than just real-time trading, but real-time transaction finality and all the benefits that can provide. So the next slide is saying, how can we achieve this? Well, about 5 years later, 5 years ago, I had a good day in terms of looking at the challenges within blockchain, and this is what we've been working on to design and build. But you need simple scripts. You need intuitive control around how people interact with these networks. We also feel it has to be self-synchronizing, which gets to real time. And this is where we're trying to develop the means to allow networks to synchronize without consensus, without mining, or without a central control. And then that gets us to real-time processing and finality. And obviously you want something that can deal with the tens of thousands of transactions. And then critically, although some people regard blockchain as the triple entry, double entry accounting is still around. It's been around since the Renaissance. It's a legally required mandate. So embedding that in your mutual record is critical. And then obviously interoperability again between the networks. So this is where we're hoping to realize that potential of security, quality, performance, but more importantly, to make it accessible, affordable, and have a low cost of entry. If you'd have gone to 20 odd years ago to the telephone companies and said the internet will make that nascent online bookseller and Amazon and that DVD delivery service Netflix your main competition, no one would have believed you. But it was because communication was commoditized and content became king, and the telephone companies got in bed with cable companies. It was content that became the product and service. Next slide. So these are some of the realities that are actually happening in the banking world. There are trust banks that have been formed to hold digital and crypto assets. There's multiple digital exchanges that are registered now with the regulators. Legacy banks are partnering with fintechs to allow customers to trade and custody crypto assets. And global banks are creating blockchains for internal transfers, where they move a lot of money inside their own infrastructure rather than the external market infrastructure. Multiple banks and brokers have proof of concepts with exchanges, and depositories have proof of concepts with digital clearance and settlement. And then there's fiat to coin to fiat, bank-to-bank transfer has been experimented with. At least it says here 40 plus. I think the latest BIS is up to 60. Central banks are looking at central bank digital currencies. So this is the state of play. So things are happening. Blockchain is being implemented, experimented with. And if that potential can be realized, it's going to be huge. So how will the future unfold? Next slide. So what I like to see is that the legacy financial services exist. It's got the scope and scale, but it's inflexible and costly. We now have the blockchain, distributed ledger technology, crypto, DeFi, metaverse world that has the innovation, but it's transient and immature. Can they influence each other? The legacy world can digitally transform itself and potentially absorb or replace, and the new digital world can expand and stabilize to disrupt and disintermediate. So I believe it will be a hybrid of the both, and that's unrolling, as you can see. So I wanted to get through my materials fairly quickly to allow more time for Q&A. And again, I will be there tomorrow at the event and also at the Whitmore event. So if there's any more detailed questions, I'll be happy to take them then. But if there's any questions now, let me know.
Any questions from the people here? Here we got one. Hold on. Who are you and who do you represent?
Hello, my name is Eugene Morozov. I'm representing a Freeton distributed, decentralized online community. And I have a quick question. You mentioned the need for scalability and network finality. In your opinion, what are the numbers that are you looking at? What number of transactions per second, and by transactions I mean smart contracts execution, right? Obviously not the simple transactions. What kind of TPS you're looking at, and what kind of network finality, in your opinion, would be sufficient to achieve mass scalability and mass adoption? Thank you.
I think the range is in 10 to hundreds of thousands of transactions that you have to minimum. But obviously with further adoption, that has to, you have to imagine that has to be increased. The key though is to make the process linearly scalable, which means that you can add as much computational power to both transaction generation and validation to meet the demand. The challenge with consensus or other groups that have latency latency, but they can also, their computational demands can expand exponentially. But the key thing is also to have real-time settlement. Without that, you have arbitrary settlement, and therefore you can't do real-time intraday financing.
And again, thanks, Paul. Appreciate it.
Thank you. Bye-bye.
As the Internet Protocol made communication consistent, Tapestry X will do the same for the secure recording and transfer of digital assets. Go to our website at tapestryx.com to book a demo. Thank you.